This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Okay, so let's go through and just put into practice what we've just covered in the previous video by looking at the accounting treatment, not for a joint venture, because joint ventures are equity accounted for, and we've done equity accounting before within financial reporting, or the old F7, whatever you want to call it, and you should be reasonably comfortable with equity accounting. Instead of having an investment in associate, you have an investment in joint venture, and instead of having share of profit of associate, you have the share of profit of joint venture in profit or loss. Okay, here what we have is a joint operation. Okay, so what it likes us to do is to show how we're going to account for this joint operation in the consolidated financial statement. So within your group statement of financial position and your group statement of profit or loss. And here the year ended is the 31st of December. Is it there? 2015. Okay. So what have we got? Well, here it says Leon has a 40% share of a joint operation. So we're going to record our share of the joint operations assets and liabilities, our share of the joint operations revenues and costs within the financial statements in the SFP and statement of profit or loss respectively. We're given the following information about the activities of the joint arrangement. So it gives us the information about that natural gas station and the fact that it cost 15 million to construct. It was completed on the 1st of January, so the 1st of January 2015 being the start of the year. So we'll assume that that is when the asset is ready to use. So therefore it will be depreciated over its life of 10 years. So there's information within there to help us think about the statement of financial position in terms of the property, plant and equipment, recording it at its carrying value, and then looking at the depreciation in profit or loss, isn't there? Okay, but again, the key bit here is that it's a joint operation, so we only account for the 40% share. Okay, assuming that that natural gas station, we're going to share the costs of construction based upon the proportions. It then tells us that in the year, gas with a direct cost of 22 million was sold for 30 million. So we're making profits on this sale of gas of 8 million in total. What's our share of it with regards to revenues and costs? Additionally, there were also some operating costs of 1.5 million. And then the key there, isn't it, is in that third bullet point, is that everything, assets, liabilities, revenues, costs, are apportioned on the basis of the shareholding. So everything needs to be there. Is it based upon that 40% holding, isn't it? Okay. What we're told is that Leon has only contributed and accounted for its share of the construction cost. So that's been dealt with, paying 6 million. Now, if you take 40% of 15 million, that does give you $6 million. Okay, so they've accounted for that correctly, but they've obviously not then depreciated it or done anything else with it. The revenue and costs are receivable and payable by the joint operator, who settles the amount outstanding with Leon after the year end. So we need to go through there and look at the amount of revenue that we are due and how much that then gives us the receivable, and then the cost that we need to pay our share of, which will give rise, is it there, to our payable. Okay, so I'm going to go through their focus first of all on what would appear on the group statement of profit or loss. So here what we've got with regards to the revenue, and is it there, your direct costs, we need to go through there and record our share. Is it 40% of, was it the 30 million and 22 million? So I'll work in round thousands. So 30,000.4. Does that give me 12,000? Let's be clear that we're working in thousands. The direct costs, we're there at 22. Was it 22? I think it was, wasn't it? Yep. Give me 8,800, doesn't it? Now, you've got to be careful. You know, that those figures there will be consolidated within the rest of the consolidated statement of profit or loss, wouldn't it? So the 12 million there would appear within the other revenues of the parent and the subsidiaries. We consolidate it line by line 100%. Similar there with the direct costs. You take the direct cost of the parent, the direct cost of the sub, add them together 100% line by line, and then add on top that 8,800. Okay. Now remember, it's not just about the calculations. There's some explanation within there as well. So you need to explain what we're doing with regards to the rules. It's a joint operation. So therefore, we put in our share the assets, the liabilities, the revenue, and the costs. Okay. What else have we got? So we've also got those operating costs of 1.5 million. So 40% is it there of the 1.5 million. Does that give me, is it 600? Okay, so that's where we stand currently. Okay, there is another cost that is going to go in there, but we'll deal with that in a moment, because we now need to go through that and look at the group statement of financial position. And within the group statement of financial position, we've got our property, plant and equipment. Remember, that was there based upon the 6 million, wasn't it? Was it 40% of the 15 million? However, we then need to depreciate that, don't we, over the 10 years. So is that the 6,000 over 10 years? Is that 600? So giving me a carrying value of PPE of 5,400. And then do not forget that that depreciation expense for the year goes to profit or loss, isn't it? So we've got there within our statement of profit or loss, the depreciation is another 600, isn't it? Okay, there we go. So we've dealt with all of the accounts with regards to the PPE and its depreciation, the revenue and the costs. However, what we need to go through and deal with then is the revenue and costs being receivable and payable by the other joint operator. So what we've got there is that here, that revenue of 12,000 or 12 million is going to be a receivable on the statement of financial position. So you're going to have there, is it a receivable of 12 million? And then what we have there is we will then total up the costs. 800 plus 600, does that give me 9,400? So there will be a payable within current liabilities. Is it there of 9,400? Okay, there we go. Excellent. So again, I think within there that there's easier elements. I think the easier elements there to do with the property, plant and equipment, and saying that, look, well, we're going to capitalise our share of the costs incurred in constructing that natural gas station of 6 million. Then we depreciate it over its remaining life, or its life of 10 years. So therefore, we charge 600 through profit or loss, and we have a carrying value of 5,400 on the SFP. That's financial reporting knowledge, or F7 knowledge, isn't it? Okay. Then you've got the more difficult bit, I suppose, which is going through there and recognizing our share of the revenues and the costs. I suppose that's not entirely difficult. I suppose then what you got to be careful of then is that you make sure there that the revenue gives rise to the receivable, because effectively you're crediting revenue, debiting the receivable, and then on your costs, that give rise to a payable because you're debiting your costs, crediting the payable, isn't it? So that gives us the 12,000 receivable, the payable of 9,400, which will be included within the consolidated accounts. I think that's about as complicated as what it would get. Okay. If the examiner were to try and make it more complicated, is that possible? Everything's possible. Is you might get some form of liability within there. So maybe you borrowed to go through there and fund that construction. So you might need to go through there and treat that borrowings as some form of financial instrument, as amortized cost. Ooh, sounds horrible, doesn't it? So yeah, I think the examiner would take pity and will go as far as that. Okay. Anything further, don't worry about it. Okay. Have a go at it. Get the basics and then just move on. Okay, so there you go. That's it for now. I'll see you all within the next chapter.